Joining me to explain a little bit more about this is Batanai Matsika, the head of research at Morgan & Co., come to us live from Harare. Now, this seems very, very odd to a lot of people who've read it this end. It seems like, again, we're going back to President Robert Mugabe's days of conspiracy theories. Everybody's out there to try to undermine and get at the Zimbabwe economy. What is the real truth behind this, you think?
Okay, so it appears as if, we are sort of in a merry-go-round. We were actually going back to the days of Gideon Gono, when the ZSE was actually shut down, suspended for 4 months, and we had a lot of, money printing and things like that. So really, I guess some of these restrictions that are being put are not really solving the fundamental issues. I think as Morgan & Co. research, we've been quite clear that the underlying issue within the currency crisis in Zimbabwe has to do with our confidence levels in the ZWL. Because by the end of the day, what's happening, especially on mobile transaction or whatever platform that you use to transact, the values, they are actually increasing as a result of the instability in the ZWL and also inflationary pressures. So we are seeing that values would increase on a daily basis simply because the ZWL is not really a stable currency, so to speak.
And again, the country's got bigger problems, and we've got something like, 786% inflation. Surely this is not really a big issue by comparison.
Yes, I mean, that's a major cause of concern, the fact that there's a lot of hyperinflation, and we've seen the pass-through effects of the deteriorating exchange rate. But the manner in which we view this whole local currency thing is, I think it was done prematurely. I think we've discussed this very program to say that the reintroduction of the ZWL was quite premature, because if you then look at the functions of money, for us to actually treat ZWL as money, to actually serve 3 major functions. It should be a medium of exchange, a unit of account, but also quite importantly, it should be a store of value. So we find that given that inflation has hit around 1,000%, we think it's more than the 785% that the government is putting out. Definitely, it does not serve as a store of value. And as a result, it's not a preferred medium of exchange, especially when you then consider that agents and merchants are actually preferring to transact in the US dollars as opposed to actually, doing any transaction in ZWL, simply because it's highly an unstable currency.
And this currency itself seems to me at the center of this whole issue. I mean, it was pegged at 25 to 1. It's now more than 57 to the US dollar. It seems it's on one way down. But again, isn't the financial system of Zimbabwe losing out by suspending mobile transactions on the market? Because certainly a lot of people who are out trading, they're going to say, oh, well, fine, you don't want to do this, I'll go trade somewhere else. I'll go to Lusaka, I'll go to Johannesburg. Isn't the country going to lose money through that?
Yes, definitely. I think that there's some weakness in terms of how some of these policies are actually being pushed out. Because on one end, we are coming out and saying that we want to be open for business, we want to attract foreign direct investors, portfolio inflows, and things like that. Then you then suspend the stock market. So it doesn't work well, especially in terms of just attracting investors. Because by the end of the day, these investors actually have options. They can put their money in any other emerging market. So really, I guess there's need for proper policies and also to have congruency in whatever we're actually projecting out there. Because by the end of the day, we're actually losing out quite a lot, especially in terms of the image, but also as an investment destination.